Hi, everybody. I'm Jessica Stone. Right now, we're going to take a look at the Chinese economy as an example of an economy that's already been through the coronavirus impact and is coming out on the other side. We want to find out what we can learn as Western economies from that experience. So let's start with the statistics. First of all, we got a bunch of numbers of economic data on the first 2 months of what happened in the Chinese economy. It was released by the National Bureau of Statistics on Monday, and what it found was that there is a big contraction in the Chinese economy in those 2 months. Home sales down a third, retail sales down a fifth, and major contraction in factory output. At the same time, though, as I said, we are seeing the numbers decrease of cases and newly reported cases in China of the coronavirus. And we wanted to look at how that economic recovery has happened from, first of all, from the vantage point of somebody who's living and working in China. So I reached out to Jia Guo, our Chinese employee who's with Stansberry, China. She normally works in New York, but she was on vacation with her family when the coronavirus hit and when the travel ban was implemented. Here's what she's seeing every day out her window and what's changing.
I came to China for the Spring Festival this year without knowing how severe the situation was. But unfortunately, when I came back, I began to realize, wow, this is really serious. And actually, on February the 2nd, there was a travel ban issued by the U.S. on all Chinese nationals to go back to China. So now I'm currently stuck in China, unfortunately.
So you've been there for more than a month. What have you witnessed in terms of how China has dealt with the coronavirus?
The shopping malls are closed. Banks were closed at that time. The schools were closed, and people, they had to stay at home.
There are other countries who are really looking at the example of what you've just witnessed to see if it's something they should do. And there are differences, obviously, between Western and Eastern countries and their governments and how they approach something like this. What would you tell them about your experience, maybe to make them understand what it's like and perhaps why it's necessary?
Right. I can only speak from my perspective as a general citizen in China who have experienced this whole drama. I'd say that, first of all, it is necessary to quarantine, people, in times of public health crisis, as I mentioned, because as you know, China is a very a populous country, and a lot of cities, they have a dense population. So quarantine and staying at home is a very necessary measure to keep everybody safe. And I also have to point out that this type of virus is very contagious. I've seen information that it can spread very easily and very quickly. And for patients at the very beginning, they probably don't have any symptoms, or they have very minor symptoms. But once, they can be okay today, but some people, they died the next day suddenly. And I've seen a lot of this type of news. So I think that people should take this very seriously. It is not for the sake of their own health, but also just to protect their families, their friends, and everybody around it. So I think from the mentality, they have to take this seriously.
Thanks so much, Ja. Well, next we're going to go to one of Stansberry's analysts who lives in the Philippines. He works a lot on China. His name is Bryan Tycangco. We reached him at his home in the Philippines. Bryan, the coronavirus hit at a time when economic activity traditionally takes a pause in China. What was the impact of that economically at first and at the beginning of the outbreak, and also as time went on?
Lunar New Year is such a big event in China that it accounts for 1% of 2.5% of total retail sales for the full year. Imagine that. That's $150 billion, equivalent to the economy of a country like Hungary. So that's a big dent. Because it fell on that period, what we saw was China locking down the entire Hubei province, quarantining basically 60 million Chinese, and also locking down the use of transportation, particularly airplanes and trains, to prevent hundreds of millions of Chinese from traveling during the peak of the viral epidemic. Now, that obviously is going to hit retail, hit services, hit retail sales during this period. But we are now seeing some positive signs of a recovery. It shows us that China's approach to locking down cities and quarantining huge swaths of the population is actually working for China. And another proof of this is there's a lot of companies in China now that are getting back to business. They're now reopening their stores. They see that the government efforts are doing a lot of good, and they're now confident enough to get their stores back up, to send their staff back to work. Starbucks, for instance, has already opened 90% of its more than 40, I think it's 4,000 outlets all over China. Chow Tai Fook, the nation's #1 jewelry retailer, has opened more than 80% of its outlets in China. And even Hermes, that incredibly expensive luxury retailer, has already opened all but 2 of its outlets in China. This is telling us that China is now beginning to return to some sense of normalcy.
So tell us, what are some steps that Beijing took to help its economy? What would you say worked, and what would you say did not work?
Now, even before the coronavirus erupted in China, Beijing was already locked in a trade war with the U.S., and Beijing has already been making certain efforts to help stimulate the economy. And one of these, probably one of the biggest, was cutting the triple R, or the reserve requirement ratio. That is the amount of deposits that banks usually have to hold in reserve, and they cannot lend out. That basically restricts the amount of liquidity in the market, and they cut that rate by 0.5 percentage point in January, right before the coronavirus hit. That means because the economy took a dive in late January and February, we have not really seen the impact of that liquidity boost that should have come because of that cut. Now there's already talk of another reserve requirement rate cut this month of March, and that could be anywhere from 0.5% to 1%. Now, if that pushes through, you could see probably the combined 2 triple R cuts. That could see anywhere from 200 to 300 billion of liquidity flowing to the markets. But there's a caveat: there has to be a return of confidence. You cannot. It's hard to see any benefit from a triple R cut because nobody's going to be in the mood to borrow money.
Bryan, obviously the economic systems are very different between the East and West, China, and capitalist countries like the United States. But what would you say Western countries can learn from China's experience in terms of the economic recovery they're now seeing on the other side of the outbreak?
That locking down of entire provinces, cities, that all boils down to technology, and I think that is the most consequential result of China's new technology now. The use of the rampant use of technology all over China, with their WeChat payment systems, their artificial intelligence, their surveillance systems, even their whole cashless society. This is now coming into focus because of how quickly and how effectively they were able to contain the coronavirus in China, and how it's now resulting in a rapid decline of new cases and new deaths. Imagine, technology has been used not just to make sure that people stay in their homes, but also to make sure that they know where they should be, that they know what they can do, that they know that they don't have to run out to a store for fear that they're going to run out of supplies because of technology now. Okay, they know with just a few clicks of their smartphones, they know that there is this much stock of supply or whatever in this particular store, or if there's none there, there's another one here in this other store. it doesn't result in panic. See, and the China's cashless system is also to be credited for helping manage the outbreak in China, because imagine not having any way of cashless payments at all, and you have a quarantine of an entire city. How are you going to buy your food? How are you going to get the money to buy the food? You might have a bank run. You might have riots in the street because people don't know if they have money or if they have food to buy. And technology has played such a big role in China in addressing all of these concerns in an age of epidemic like this. So that I think that is something that a lot of countries are going to be looking at and researching on ways to at least figure out, maybe the Chinese are onto something here. Maybe we need to focus on these technologies so that we can be better prepared for another outbreak in the future.
So at the beginning of the year, we had just had this phase one trade agreement between the U.S. and China, and now there's a lot of people saying they don't think China is going to be able to meet its purchasing commitments under that agreement. What do you think that could do to the U.S. economy that was counting on those purchases to increase its bottom line?
I think it's going to be difficult to justify enforcing these commitments in light of the coronavirus pandemic. China, it's clear that China's economy is down right now, and kicking it while it's down, it's not going to do a lot of good for the greater majority. If the U.S. wants China to purchase a lot of its products, it's going to be hard to do that when China's economy is in the tank, and it's going to be hard to force that upon them, especially in this situation. You obviously want China's economy to be growing, because if it's growing, you'll be able to sell them more things.
Finally, Bryan, what would you tell subscribers who may have an appetite to get back in the game sooner rather than later, are looking for places to invest in China, in stocks? What are some areas, industries, opportunities that they can seek out?
Technology has played a great role in all of this. I'm talking about AI, artificial intelligence, the use of drones, the use of cashless payment systems. All of these, because of what happened in China, are so far, as long as there isn't any new massive resurgence of new infections in China, it's going to be a big win for them. It's going to be a big win for the technology that they use. So what's going to happen is these technologies are going to play an even bigger role in the future, and there are going to be more investments being poured into things like AI, things like robots. Now, robots are actually now being used in some parts of China to help detect customers' temperatures. So whenever you walk into if you would walk into a mall, a robot would come up to you and you would look at the screen and it would take your temperature, and it would basically, using AI, would screen if you are healthy or not, and maybe recommend that you might need to go home. So it basically is now your first line of defense for preventing the spread of these deadly diseases. And that's going to be big. I mean, that's it's the investments in these companies, I think, will even accelerate because of coronavirus. And these are the sectors you want to focus on starting this year because of this.
Our thanks to Bryan Tycangco for that. In closing, consider this. Just a few months ago, China's stock market was among the worst performing in the world. And now, on the other side of the coronavirus outbreak, it is among the best. I'm Jessica Stone.